Alright, so stocks went lower today, and you know what that means. It means the stock market is on a discount. So I thought it'd be a perfect time to make a new video. 3 stocks to buy right now. Well, not right now because the market's closed. So 3 stocks to buy tomorrow, and you know how it goes. Low risk, medium risk, high risk. Let's get right into it. Alright, so boom. The first stock I'm going to be talking about today is Salesforce. And the stock is trading right now at about $210. That's what it closed at. And what Salesforce is, for those of you who don't know, it's basically a software company that many companies use. So we're talking about corporate jobs right now. So like, anybody who's at a higher level of management in any small business, big business, they use Salesforce to organize their spreadsheets in a more detailed manner. This is similar to what Excel does for a lot of businesses, where companies can track, how much quantity of products they have, how much they're selling it for, just keep track of, details from the day-to-day businesses. But Salesforce takes that a bit further. So they allow companies not only to organize all their information into spreadsheets, but also to track what their customers are doing. So say it's a retail shop like Urban Outfitters. They might be able to use Salesforce to see where all the consumer traffic is going, see what customers are looking up. So if it's the summer, they're probably going to be looking up, things like tank tops, shorts, shirts. If it's the winter, they'll be looking up coats, sweatpants, things like that. So what the Salesforce software does is that it allows companies to track what their customers are doing, what they're viewing, and kind of target those main areas of strengths for their businesses. And this is big because it allows marketers, it allows advertisers to really target what their customers want, really make an emphasis of what their customers want, which can bring future consumers and keep bringing back returning consumers. Also, with their employees and management, it allows management to view how much time customers are spending on certain tasks, certain projects, what areas they're having more difficulty with. So it allows them to address those issues internally, which makes the business function a lot smoother, a lot more efficient, and it's really a game-changing platform. Like, people outside the business world don't really know what Salesforce is, what it does, and it's because it's mostly a business type of tool. It's like every business uses it, but it's not really something that an individual uses because it's very expensive. So typically for businesses, it costs them about $1,000 a year per user. So the subscription costs are very, very high. So take this into account. Let's say a business has about 1,000 employees and they each have access to the Salesforce software. That's going to cost them $1,000 for 1,000 employees. That's going to cost them about $1 million just in Salesforce expenses. But businesses are purchasing Salesforce because, it just makes the business run so much smoother, so much more efficiently. It's a game changer, really. And people are really using Salesforce. So just by looking at the numbers, in 2020, their subscriptions grew by 25%. And in 2020, their sales also grew by 24%. And since 2018, it has doubled. So in 2018, they had 10.5 billion in sales. In 2020, they had 21 billion. And this just goes to show how fast the movement to this digital type of data is, this digital type of marketing and advertisements is. So if we look at the chart for Salesforce, real quick, we can see that they hit a high of 285 back in August. And this was around the time that they announced an acquisition of Slack. And it seems like investors didn't really like that. So as you can see, before that, they recovered real quickly from their lows of 130 back in April of last year. And since then, the stock was rising pretty rapidly till it popped up at 284. And since then, it's just been going down. So right now, it trades at about $210, and it is right at that 50-day moving average. So for me, technical analysis is not really that important when looking at stocks. I think technical analysis really just serves a purpose. Once you've already analyzed a business, you know what they do, you know whether they're in good financial standing or not. It's a good way to indicate what price levels you might want to get in at, whether the price is currently oversold or overbought. And that's really what I use it for. So I just wanted to get into this quick technical analysis. And as we can see, it is at 285. I mean, the 52-week high was at 285, and that was back in August. Since then, it has gone down, and it is right now trading at about 210, which is right in line with that 50-day moving average. So if you want to be patient with it, maybe it goes back down to 200, but I wouldn't bet on it. I think right now is a great price to get into Salesforce for all the reasons that I told you. It is growing. Really nothing has fundamentally changed about the business since it hit that 284. I wouldn't be surprised if this stock starts to rally again as the summer months come, as they close that deal with Slack. And really, I think right now is a great opportunity. Alright, so the next stock we're going to get into is Apple. And I'm sure many of you are familiar. Right now, you're probably using your iPhones, Macs, AirPods, iPads, all that good stuff. And their stock has come down. So as we can see, it was at a high of about 145 late January, and since then it is sold off just how the Nasdaq is sold off and other tech stocks. And I think right now it is at an interesting range, trading at about 120. So some quick stats with Apple. Their price to sales right now is 7.5, which isn't great. Like that does mean that it's a little bit overvalued. But at the end of the day, it's Apple. They're going to keep coming out with new iPhones, with new AirPods, and people are going to continue buying it, because that's just what they do. But an interesting thing about Apple. So in 2020, their sales grew by only 5%, which isn't great, but I do want to detail this. So they had $274 billion in sales. About 50% of that came from iPhones alone. So they are really reliant on their iPhones. They really rely on people upgrading to the next best thing. But another significant part of their sales, about 20% of it, came from Apple Care. So what this tells me is that a lot of people, when they damage their iPhones, they damage their Macs, iPads, whatever, they're going to Apple and they are paying them to repair these products. So personally, I've broken my iPhone screen about 3 times since I got it, and each time I go to Apple Care, it's $100, and they fix it, they return it in about a day, and that's about it. I don't have to buy a new iPhone. I really find it interesting that 20% of their revenue comes from this, and it makes sense. I mean, Apple products are very delicate. They break really from the stupidest things, and I can see people continue purchasing Apple Care because it's really a great deal. I mean, you break your iPhone, an iPhone costs about $1,000. Would you rather pay them $100 to fix it and give you one that looks pretty much brand new, or would you rather, pay out $1,000 for a new phone, whether that's an iPhone or a Samsung or anything like that? I mean, the business model really makes sense, and they make a decent amount of money from it. So 70% of their sales comes just from iPhones and Apple Care, which is pretty significant. There are rumors that Apple will be releasing new products in April. I don't know if any of these rumors are true or not, but if they do, I would expect this to benefit them in a positive way, especially the spring and the summer months as we get closer to the new release of the next iPhone. So if we go back to their chart, as I said, it topped out at about 145 in late January, and since then it has gone back down to 120. So it's in this interesting spot. So I highlighted this little gap that we got back in August, where the price literally just jumped up from the low 90s to about 105. And I'm really looking at this area. So with Apple, I don't think you could go wrong with buying it right now. It is at 120. It's probably going to go up as they release new products, as new sales for the iPhone come in. But really, if you're a little timid right now because of how tech stocks are acting, I would suggest waiting a little bit, because I wouldn't be surprised if Apple does go back to that $106 range. It did it back in September, and it did it back in late October. So I wouldn't be surprised if Apple retests those $105, $107 levels, but I wouldn't bet on it going any lower than that. Really, I think this is a great buy. You know what you're getting. It's the richest company in the world for a reason. The products are great quality, although the screens always break for some reason. I don't know why. It really doesn't make any sense, but it's a great buy. I think people love their products. They're not gonna stop buying it. For what? Like what are you gonna buy instead of an iPhone? Like a Samsung and get the ugly emojis? Like, no disrespect to Samsung, but like y'all gotta do something about those emojis because they're not it. Dog I wanted to get into is Spirit Airlines, the meme of all airlines, and I love this stock. I didn't really want to touch upon airline stocks because, right now, well, back in 2020, a lot of stocks, a lot of airlines weren't flying because of the pandemic. But after looking at a few, I truly believe Spirit Airlines is in the best position and perform better than some of the bigger airlines. And although it is the meme of all airlines, as Elon Musk once said, he who controls the memes controls the universe. And if Spirit is a meme, then by that logic, they do control the universe of all airlines. When we take a closer look at Spirit, we see why it is possibly the best airline to buy. So it is trading at a forward PE of 18. The S&P 500, the 500 biggest companies in the world, are trading at about a PE of 35. So they are trading at about half the multiple of the biggest companies in the world. This is already a good sign. But then if we keep looking a little bit further, their price to sales from 2020 was 1.7, which is great. That's already great, but I don't think we should be looking at 2020 sales. I think we should be looking at 2019 sales because that's the last time this airline actually had a fair chance at producing high sales. Obviously in 2020, many planes were grounded and people weren't really flying as much. So if we look at price to sales using 2019 sales, they have a price to sales of under 1, which is a great ratio when looking at undervalued companies. So this is already looking like a great stock right off the bat. And if we keep looking further, their balance sheet looks amazing. So like I said, I was looking at balance sheets for other airline companies, and many of them had more liabilities than they had total assets. That's not the case with Spirit. Spirit has about $8.9 billion in assets, only $6.7 billion in liabilities. So their financial position is pretty good right now for an airlines. Like I said, many of these companies had to raise debt last year just to stay in business because nobody was flying, so no money was coming in, but they still had to maintain all the planes, make sure they still were safe for flying. And that brings me to my next point. The thing with Spirit that sets them apart from other airlines is a lot of their planes are young. So about 80% of their aircrafts are less than 10 years old, and about 40% of their aircrafts are less than 5 years old. So not only do they have good financials, they have very good valuation, but many of their operating functions, such as airplanes, are very young. So that means they don't really need to spend as much as other airlines on new planes. So like I said, another big advantage for Spirit right now is that domestic traveling is returning. So this seems to be like the first type of travel that people are doing. As we could see last week, spring break, disaster in Miami. It just shows that people are anxious to travel. And if we look at their chart, they were down bad at the beginning of the pandemic, about $7 a share. But since then, they've recovered and gone as high as $40 just 2 weeks ago. So what does this tell me? There's strong interest in the stock, but like I said, this stock is still very undervalued. Price of sales is still less than 2, which is a great measure of valuation. I will say though, as of today, they're trading at $34, so they just broke below that 50-day moving average. I mean, personally, if you're holding this stock for the long run, I think this is a great stock to buy and hold. I can easily see it going over $70. It is at such a low valuation. It's only worth $3 billion. So it really doesn't take much for this stock to rise. and I can see it going as far as $100 in the future. Probably not this year or next year, but once airlines fully recover, this is a stock that can easily pass $100. I would recommend buying right now. If you want to wait, maybe it goes back to this resistance level at 33, but really $33, $34, you're not really, saving all that much. So just get in while you can. So I really appreciate you guys watching this video. Don't forget to hit the lovely like button and subscribe down there. Every week, you know how it goes. 3 stocks, low risk, medium risk, high risk. I'm going to see you guys next week.